Welcome to Trading Day. I'm Andrew Bell. Let's get to the big stories we're bringing you from our newsroom. Shares of Air Canada are in the red. The airline is suspending service to Cuba due to an ongoing shortage of aviation fuel on the island. Air Canada says the decision was made after governments issued advisories about unreliable fuel supplies. Cuban airports likely to just be empty. Their fuel tanks likely to be empty starting tomorrow. Air Canada plans to operate empty flights to bring back about 3,000 customers already in Cuba, and it will tanker in extra fuel if needed. Bloomberg says Newmont Corporation wants Barrick Mining to improve its Nevada operations before it spins off the assets into a publicly traded company. Newmont apparently wants Barrick to address underperformance at their joint venture in Nevada. And also, apparently, the U.S. company thinks it has the power to block the IPO. Newmont has been critical of Barrick's management in Nevada after years of production weakness and rising costs. Shares in Bombardier edging higher after the jet maker agreed to buy a company called Velocity Maintenance Solutions. Bombardier says the acquisition will take place through its U.S. subsidiary and is aimed at expanding maintenance, repair, and overhaul services in the United States. Terms were not disclosed. And there is a look at the TSX hanging in there today. We did see gold top $5,000, and it is interesting to see our market trading near record highs. Jefferies has published a chart pointing out that commodities, as measured by the GSCI index, are weak, the weakest in years versus U.S. equities. You can see the commodity index spiked back when the Arab oil embargo came in, and then during the Gulf War, the first Gulf War, and then the 2008 oil price spike above $130 and the global financial crisis. But since then, it's been just downward for commodities versus shares. So maybe room to improve there. And let's have a look at the U.S. markets. The Dow hit a record high Friday, crossing 50K for the first time. It's a little weak today, but broader indexes pointing upwards. Novo Nordisk, the Danish pharma giant, is suing the U.S. company Hims & Hers Health over alleged patent infringement. That's after the American telehealth firm launched and then canceled a $49 U.S. copy of Novo's weight loss pill, Wegovy. That followed backlash from the U.S. Food and Drug Administration. Let's get more from Chuck Lieberman, co-founder and chief investment officer at Advisors Capital. Chuck, thanks very much indeed for joining us.
Happy to do it, Andrew.
So it has been an odd situation for quite a while, hasn't it? Companies, including Hims & Hers, have been selling these so-called compounded versions of the drugs.
Right, and they're doing that. They initially did it through a loophole when these GLP-1 drugs were unavailable. There was a shortage, and so that permitted them to sell the drugs. But the shortage has been eliminated because the manufacturers, both Lilly and Novo, have increased production. And so the shortage is gone, and yet they continue to sell these drugs. So I'm surprised that there haven't been more objections from the FDA and from these companies even sooner.
Is it clear that the FDA could shut them down?
Well, they could shut down the production of these drugs or the sale of these drugs.
Right.
And certainly they could do that. And they have every reason to, because otherwise people would get around FDA requirements to have drugs tested and approved by the FDA.
Now, can you clarify, these are the pills, and of course that's been the holy grail of the pharma companies, hasn't it? A pill using these GLP-1 mechanisms.
Yes, that's right. It's this particular battle is over the pill, but the fact of the matter is it really applies to all of the GLP-1 drugs.
Can we turn to the broad market? Of course, the stock market doesn't always follow the economy, but what is your view on the U.S. economy right now?
Well, I have a pretty positive view because economic growth remains quite solid. Um, the inflation numbers have come down slightly,
Hmm.
but only slightly. And we have an odd situation where GDP growth is much, much stronger than employment growth. Employment growth is adequate to keep up with population growth, but not any stronger than that. But at the same time, GDP growth is much, much stronger due to all of these gains in productivity. And so that is very, very positive in a number of ways. It elevates living standards and it helps offset wage inflation. So, on balance, the economic environment is very positive, and we see that in the form of corporate profits, which have had a very, very good year. So you put all of that together, and that's a very solid foundation for equity prices.
What about the job market? You note that possibly the curbs on immigration and the deportations are affecting it. And of course, some Hispanic people even afraid to go out to work.
Yes, that's right. And so that constrains the supply of labor. If you go back 3, 4 years, the U.S. labor force grew at a very rapid clip. And it was predominantly because of open borders. If you look at the composition of labor, of hiring, it was very heavily tilted towards immigrants. Obviously, that has stopped. It started to slow down dramatically in the last 6 months of the Biden administration, then, of course, came to a grinding halt under Trump. So the supply of labor has really been growing only modestly because the current generation of young people entering the labor market is largely offset by baby
Hmm.
boomers who are retiring. So net growth of workforce is pretty minimal, and jobs are easily keeping up with that. So that's the underlying oddity about the labor market. But at the same time, GDP growth has been very strong due to productivity gains. So the Fed is in a dilemma trying to figure out whether or not it should pay more attention to the labor
Hmm.
market or to inflation and the economy more broadly.
There's a piece in the Wall Street Journal today saying that South Texas, the economy is being weakened by these raids. The journal went to an empty subdivision that was under construction. And the local builders say, yeah, ICE comes in and it just takes everyone, whether they're legal or not.
Yeah, well, again, that gets back to the way the policy is implemented, and at the local level, especially when you go to border towns, the impact is going to be accentuated. But I'm looking at the economy on a broader scale,
Hmm.
and that's really what drives Fed policy and drives equity valuations. So when I look at that, I still see solid economic growth,
Hmm.
even though the pace of job growth has slowed quite a bit.
How are you treating the stock market now? Are there areas that you're deliberately underweighting, for example?
Well, there are areas where it's tougher to make judgments about valuation, and there are other areas where I think the case is much, much easier.
Hmm.
Um, there's a joke about a guy with one leg in a tub of hot water and the other leg in a tub of cold water or ice water, and saying that on average they're comfortable.
Yeah.
And we kind of have that in the stock market. We have the technology sector that has exploded to the upside, and the S&P 493 that has been largely ignored, and the valuations there are very, very attractive. Well, we're seeing some rebalancing of the market with the tech sector being a bit softer or not doing quite as well, while the rest of the market catches up. And I think that's where the obvious values are located and where it's safer to invest. That's not to say that the tech sector won't do well. It may well do well. And in fact, we expect continued gains in these companies in terms of their businesses. But stock valuations have run somewhat ahead of that. But in the rest of the economy, valuations are very reasonable and the companies are doing fine.
Do you think that this massive spending on AI data centers and equipment and storage by the internet giants, is that going to end in tears, do you think? Are they overdoing it?
Well, such spending increases typically do end up in tears, but The fact of the matter is there's a revolution in technology taking place, and there's going to continue to be quite a lot of spending on that. Tremendous opportunities for companies really across the board at the micro level. So yes, we're going to continue to see very strong growth. And at some point, yes, chances are good that we will overspend to some degree.
Yes.
But, the economy has a way of catching up to that spending. If you think back to the internet days when we built a tremendous amount of fiber, more fiber than could have been used at the time.
Yes.
So a lot of it went, quote, dark. And yet a couple of years later, demand for fiber went through the roof. And so all of that fiber came back into usage or came into usage.
Yeah.
I think the same thing will be true now with regard to AI and also a lot of the technology.
Thank you very much indeed. Really appreciate it, Chuck. Chuck Lieberman, co-founder and chief investment officer at Advisors Capital. Up next, we kicked off our Black History Month special coverage with a featured interview with Wes Hull, founder and CEO of Kingsdale Advisors. That's ahead. February is Black History Month, a time to mark the accomplishments of Canada's Black community. We sat down with Wes Hull, founder and CEO of Kingsdale Advisors, as well as the founder and executive chairman of Wes Hull Investments, to discuss the key to his success in the business world.
Black people have such a hard time accessing capital, really, really difficult. When I was 23 years ago, when I started Kingsdale, I had a house which had equity on it. And I tried to mortgage the house to start Kingsdale, and not a single bank in this country would loan me the money. Not a single one of them. And I was fortunate enough that I went to a bank and there was a Black man sitting behind a desk that had authority to loan money. And I showed him my business plan. And by the way, his bank turned me down. I showed him my business plan and he goes, "I love it. Leave it with me." And I was able to borrow $100,000 against my house to start Kingsdale.
Wow.
And I was pretty fortunate for two reasons. One, that I had a home that I could leverage. And two, that day when I went into the bank, somebody who looked like me was there and understood me.
Yeah.
And so that's the problem that we're having today, that there's really not enough folks at the level where they can meet a Black business person, get the passion that they have, understand the various challenges that they face, and actually give them that opportunity of a loan.
Okay, so let me backtrack for a moment. You said you were turned down by other institutions many times. Did they give you a reason as to why they were turning you down?
They said my business plan was too risky, and after analyzing the business plan, so here I am setting up a business that was going to deal with activism on Bay Street. And activism didn't really exist at the time. It was coming, but it didn't exist at the time. And I said, I'm going to be this guy who's going to advise publicly traded companies, CEOs and boards, on how to deal with activism in Canada. Now, you got to understand, why was that business plan so risky? Today, it's certainly not a risky business plan, but back then, I was a 34-year-old Black man. I was going to go into white boardrooms that were now Black people in boardrooms at the time. There were no women in the boardrooms at the time. And I'm going to advise them on how to deal with something that's not going to come yet. And so my passion, I hope that would have sold them, but it didn't. I hope that the fact that I could leverage my house and they can get their money back by selling my home would have convinced them. But the risk that they saw was that they just didn't see someone looking like me taking on that opportunity.
Okay, so let's talk about how you pay it forward, I guess, when you finally met someone who was willing to take your plan and make it happen. You invest in Black businesses. We Shall is the way you do that. What do you look for when you're deciding on who and what ideas to invest in?
Well, first of all, that's a great question in terms of why did I decide to set up We Shall? We Shall doesn't just invest in Black businesses. We invest in underserved entrepreneurs and other businesses, right? Why do I say underserved entrepreneurs? Immigrants are underserved entrepreneurs. They come into this country, they have no credit, they have no establishment, they have no relationship, no connections, they have nothing, right? And all they have is their idea and their passion. And so what they want is for someone to actually listen to them, and believe in them and give them an opportunity. And in some cases, it may not be money that I provide to them. I could provide them with mentorship. And that's really critically important to them, that they have someone who believes in them, that they can actually call and run ideas by and can get objective advice without any judgment. And that's what sometimes these people have, is that they come into the country, they may have a very thick accent, and people go, I'm sorry, it's just not going to work. Your accent is too thick. Oh, it's not going to work. You're new to Canada. You have no connections. They tell them all the reasons why it's not going to work. Well, I tell them the reasons why it can work and the things that they have to do to make it work.
Okay, but that being said, I'm sure you don't have lots of time in your schedule to take on a lot of people, and you don't have endless capital to hand out. So how do you choose the people that you work with?
Well, listen, if you watch me on Dragon's Den, you probably would see that people come with all kinds of ideas, and the people watching television go, man, that's a good idea, or that's a bad idea. And all of a sudden, they get a deal. And they're wondering, what do you see? What does the dragon see in that person? Why they invest in them? Entrepreneurs tend to see things that most people don't see. They tend to ask questions that most people don't ask. And, when you're venture investing, by the way, you're going to lose a lot of money. But probably 10% of those are going to be home runs where you're going to make a lot of money. And that's the reason why venture investors exist. They know that 90% of what they invest in is going to flop, but that 10% is going to make them gazillionaires. And so they look for that 10%, but they continue to invest in that 90%. Okay, so what do I look for? I look for somebody who's so passionate about what they're going to do, and somebody who's willing to risk everything, just like I was willing to risk my house to start my business because I was so passionate about it. And I believe that if you help somebody like that, whether not you provide them with capital or advice, you know what? If that business doesn't work, they're going to pivot to something else that's going to work. And that's the passion about entrepreneurs. They never, ever give up. They never do. They either pivot their business or they just keep on going until it works. But they never, ever give up. And those are the entrepreneurs I look for.
So it's definitely more about the person than it is about the business for you.
Yeah. Yes. Listen, when you're looking at an investor, because you could have somebody with the best business idea, but they're just terrible individuals, right? They are not transparent with you because you're not in there running their business, right? They're not transparent with you. They don't show you the books. They're not open, all those things. And they could have a great business, but if those are their Achilles heel, I'm not going to invest behind somebody like that. I have to be absolutely comfortable with an entrepreneur. And also, some entrepreneurs just don't take advice. You could give them the best advice in the world, and they will not take it.
They think they know better.
They think they know better. Don't worry. I know you've been in business for a long time. I know you're successful, but I know more than you, and I'm not going to listen to you. And you can tell those entrepreneurs immediately, as soon as they open their mouth, you can go, I am not going to give you a penny. I don't care how great you think your business is. But I think, Marilla, the issue is for Black entrepreneurs, right? There's 144,000 plus Black businesses in this country. They represent 2.4% of all businesses in Canada. That is a massive opportunity, right? But here's the problem. The problem is that most of those entrepreneurs has a problem even getting $10,000. 10 grand to do something. And that is the challenge, right? If the banks won't loan to them, venture capitalists won't loan to them, fintech won't loan to them, where are they going to get the capital from? In addition to that, Black men like me, we make 6 to 9% less than our white counterpart, right? And our unemployment among Black men is 14% in this country. So if I don't have a job to start my business and nobody's loaning money to me, how do I get started? How do I get going? And that's the difficult aspect of what these businesses face.
Wes Hall, Bay Street fixture, talking to our colleague Mirella Fernandez. Okay, and remember, it is Black History Month, February. Okay, up next, what has made the Super Bowl such a cultural phenomenon? Bloomberg U.S. sports reporter Randall Williams dives into the population, the segments of Americans who actually tune in their tens of millions to watch this game. We'll have more after this. Last night's Super Bowl 60 saw the Seattle Seahawks clinch the title over the New England Patriots. Let's get more on the business of the big game. We're joined by Bloomberg's U.S. sports business reporter, Randall Williams. Randall, thanks very much. You've written a brilliant piece here. I learned loads from it. Last year, it was about 128 million TV viewers. Now, is there any estimate for how much yesterday's game attracted, or is it too early?
Too early, not just yet, but I have my guesstimates, but I'll keep them to myself for now. I don't want, if it breaks a record, if it's under, we'll see.
And you say that the two teams, I mean, they weren't superstars. They were almost kind of drab teams, the two that played yesterday.
Yeah, I mean, you look at the previous Super Bowls, we had Patrick Mahomes, we had Jalen Hurts, we had Travis Kelce, we had Christian McCaffrey, and so many other big names. And Sam Darnold is a journeyman quarterback, and obviously it ended at the podium yesterday. On the other side, you have Drake May, who didn't play well all postseason, is not the biggest name in the world, though he was an MVP candidate. It didn't work out for Drake May, of course, and I think from that aspect, stardom does matter in terms of bringing in viewers. But I think the NFL is going to be just fine.
And you say they're smart, the NFL. They keep the product scarce. That's one of the ways they get big ratings.
Yeah, the NFL season has about 272 games, not including the postseason. And so every single Sunday, fans go from a lot of people go to church and then they get back in time to watch these games. And when you think about the NBA and the MLB, there are so many games being played all across our networks. And that's fine. It's great that they have access, but the repetition of having Sundays at 1 p.m., 4 p.m., 8 p.m., and then a Monday game and a Thursday game has sort of become routine for audiences that are tuning in.
And you note, you have an amazing figure here. Last year, 83 of the top U.S. broadcasts were, in fact, NFL games. So there's just a segment of the population that are just diehard football fans.
Yeah, football is religion here in America, and whether that be college sports or the NFL. These games really, really matter to people because if you lose week 1, if you lose week 2, if you lose week 17, that can cost you the playoffs. And, the NBA and the MLB have similar things, but the margin for error is so much larger. And on top of that, their playoffs are 7-game series. So in the NFL, you get one shot. And that one shot, everybody wants to know and see how the game's going to turn out and who's going to rise to the occasion.
Is there any risk that the Super Bowl will eventually peak in terms of cultural relevance, the younger generation not tuning in, for example?
I don't see a peak right now. I do think that the halftime show is going to have to continue to involve. The athletes are going to have to continue to involve. But I think that, look, the world has been going on for a very long time, and it's produced superstars in every era. And so there will continue to be superstars in football and on the music scene as well. And I think the advertisers will continue to evolve. And so with that in mind, I think the NFL's challenge is going to be taking it to the next level and continuing to draw in viewers at a record pace. But right now, when you do 127 million viewers based on last season's game, and that game was a blowout, it's one of those things where it's like, how high can they really take it?
Why do cities want to host it? Is it the influx of tourist dollars, for example?
It's definitely tourism dollars, but also, you think about the economic impact on San Francisco. They're estimating over $500 million. If you think about New Orleans said between the city of New Orleans and the state of Louisiana that the Super Bowl had $1.25 billion of economic impact on the region. And so for these billionaire owners, that's more money for them. If you want to have, more cash in your pockets, you're going to raise your hand for the Super Bowl. Now, outside of having a stadium, outside of having, the hotels, it does matter from a logistical standpoint. How can people enjoy this? Are fans going to have a good time? Those things matter, and the NFL is identifying cities, stadiums, and hotels and regions that can do this and put on the best show possible.
Now, you note that until 1993, there would just be things like college marching bands at halftime. But then, of course, Michael Jackson came on, and that really transformed halftime. And it always blows my mind that the artists pay all the costs of appearing.
Yeah, they do. The actual logistics of who's being paid and all of that has never come out, officially. The NFL and Rock Nation haven't revealed that. But there is a huge impact from these artists, their streaming numbers. I'm sure Bad Bunny, who performed yesterday, is going to have probably a 100% at minimum increase in streams across the world. Rihanna saw 640%. Usher saw 550% increases on Spotify. And so this halftime show has a huge, huge impact. And Bad Bunny is a huge artist. He's one of the most streamed artists on the planet. Mm-hmm. And he put on a great show yesterday. So he's going to see that same impact as well.
Yeah, I tuned in, and I'm not the biggest fan of him, but I thought that show was amazing. The technical achievement, the athleticism, the constantly moving viewpoints.
It was great. It was great. It was great to be in the stadium and experience it. I think the messaging was great. I think that, look, Bad Bunny there's been a lot of speculation as to how this show would go. Would it be super political? And I think that symbolism is something that you should always look for in a halftime show, as opposed to someone saying something on a mic. Why is that? The reason for that is because, the NFL has relationships with both its broadcasters and with the Oval Office. And the last thing that they want to do, regardless of the party that is in office, is to put a target on their back. So symbolism is a big theme, not only in this year, but in previous years as well. And Bad Bunny executed on that.
Thank you very much, Randall. That was great. Your piece is well worth reading. I learned a lot about the Super Bowl. That's Randall Williams, Bloomberg's U.S. sports business reporter. Still ahead, it's been a choppy week for crypto. Is this a bottom? We'll dig into that after the break. Shares in Air Canada in the red, down about 4%. The airline is suspending service to Cuba due to an ongoing shortage of aviation fuel on the island. Air Canada said the decision was made after governments issued advisories about that unreliable fuel supply, with fuel projected to be unavailable at Cuban airports starting tomorrow. The carrier plans to operate empty flights to bring back about 3,000 travelers already on the island, and it'll tanker in extra fuel if necessary. Shares in Cleveland Cliffs down 17%. The steel manufacturer posted lower fourth quarter revenue as well as profit that missed estimates. Cleveland Cliffs says 2025 was weighed down by weak production in the auto industry as well as a weak Canadian market. The steel company does say, though, that things are improving for 2026 so far, and that the U.S. trade environment should set the stage for dramatically improved results. Clothing retailer Eddie Bauer has filed for bankruptcy, with plans to sell as many of its stores across Canada and the U.S. as possible and liquidate the rest. The brick-and-mortar chain listed more than $1 billion in debt. The move actually marks the third time the company has filed for bankruptcy. Eddie Bauer's e-commerce and wholesale operations, as well as its retail stores outside North America, will not be affected by the wind-down. And there is a look at the TSX, holding its own today, but still down from the record highs of late January. And let's have a look at the US markets. They have been posting gains after a weak open. Now, we have seen a bounce back in some big tech names. Bitcoin still trying to find its footing. It has slid from the record highs of last fall. And last week, it dropped below 70,000 for the first time since 2024. Let's take a look at this turbulence and get some clues as to the future. We're joined by Alex Bloom, founder and CEO of 2Prime. Alex, thanks very much indeed. Just give us a quick layman's explanation of what 2Prime does, please.
Andy, good to speak with you again. 2Prime is an institutional Bitcoin asset manager. We work with large holders of Bitcoin, $10 million plus. And on the trading side, we generate low vol Bitcoin denominated returns for clients that want to grow income or get a return on that Bitcoin in low risk ways. We're also one of the largest Bitcoin backed lenders in the world. So clients send us Bitcoin and we lend cash against it. And we've done about A little over $3 billion of loans over the last 2 years.
Now, we've seen Bitcoin sell-offs before, flash crashes. I mean, it's still a new asset. Apparently, in the industry, they have a thing called the rainbow chart, and we've entered the so-called purple territory. And that, ironically, is called Bitcoin is dead. That's the ironic name for it. But for veterans, it's a signal that a lot of the speculators have simply got out.
Yeah, I think for those of us who've worked in this industry a long time, I've owned Bitcoin since 2013. We've heard all these claims of Bitcoin's dead and it's over so many times that you grow insensitive to it. That being said, we are in a significant drawdown, 40, 50% from all-time highs last year. And so you see retail people give up, they're fearful, but those with more experience or more institutional mindset tend to see these as good risk-adjusted return places to get an entry point.
How has the advent of ETFs, which have attracted so much money, changed the crypto market?
Yeah, so, I think that people thought, as this asset institutionalizes, we're probably done with this crazy volatility and these cycles are likely over. And it is true that even now with this 40+% drawdown, it's a lot of volatility, but it's still significantly less than 80, 90% drawdowns we've seen in past cycles. And so this dampening of volatility is occurring. I think with ETFs and institutional piping, it's not just the ETFs, it's the derivatives market on top of ETFs. You still can see massive bets in the wrong direction that lead to liquidation cascades, that lead to major gamma squeezes. And that's a lot of what we saw over the last couple of days. We also, as the Bitcoin lending market ramps up, all those loans, if the price of Bitcoin drops, you have to send in Bitcoin or your loan is in default. For institutional clients like ours, they have plenty of Bitcoin. It's not a problem. But a layer down for retail or maybe mid-market borrowers, they may not have the ability to do that. So what happens is they default on their loan, their Bitcoin gets sold, and it's just more selling of Bitcoin that for a short period can send the price downwards. I'd say, I'll stop there.
Okay, but so the equivalent of margin calls could force liquidation, in other words.
Yeah, I think I saw in Coinbase there was over 150 million of kind of retail margin calls last week.
Okay. The Bloomberg has been writing about this. Everybody's been writing about this. Vasilis Karamanlis had a piece last week and said, this looks like a real test of institutional reserve. I guess the implication being some of these institutions are relatively new to crypto. Do you think this is new in that we have these new institutions, professionals who are in crypto and haven't seen a drop like this before?
Well, I think it definitely shows you the asset is what it's foretold to be, which is volatile. You have institutional ETFs like BlackRock's ETF or Fidelity's. That being said, the owners of that ETF are likely high net worth individuals or retail buyers in large amounts. And so, it's an institutional product, but you still have retail buying behavior inside of it. Another layer of institutions is maybe professional market makers or hedge funds. And for those groups, volatility should be open season. It's a time to make money like we have for our clients over the last week or so. And then I think another layer is institutional or these DATs, digital asset treasuries that are public companies that hold Bitcoin. And I can tell you for those that we already work with and some that we're onboarding now, nobody's plans are changed at all. Everyone's undeterred. They're still figuring out ways to monetize their Bitcoin or looking into other kinds of financial solutions of how to build Bitcoin-based operating businesses. And I think those veterans are undeterred. You
say that you have seen with your large institutional Bitcoin holders, I guess some of your clients would be in that group, they've been moderating their expectation of returns over the medium to long term?
Well, I think if, like any maturing asset, the amplitude and volatility of that asset over time tends to dampen. We saw this with the VIX, with almost any maturing asset, that's what occurs. And so I think that a lot of people's modeling is, Bitcoin's up like 1,000,000% since it was first created. I don't think anybody thinks it's going up another 1,000,000%. And so it's just a question of, are we going up a 2x over the next 5 years? Are we going up 5x? Things that are still well within the possibilities of Bitcoin, but it's days of 100x returns, I think, are behind us just because it's such a large asset at this point. And it's a lot of that adoption of early stage, high risk, high reward adoption is behind us. That being said, in terms of a risk adjusted return, it's probably one of the least risky and best upside bets on any kind of institutional asset available right now.
Tell us something that we don't realize about the Bitcoin market. I mean, it's nascent. I know it's been around for quite a while. You've been involved for more than a decade, but a lot of people are still finding out. Is there some myth out there you'd like to explode, or is there something that people don't realize is going on?
Well, I think there's two things that come to mind. One is, from our end, we do a lot of delta neutral ARB strategies that take advantage of basically how fractured the market remains. And so across custodians, exchanges, prime brokers, there's really still a lot of immaturity and for us, a lot of opportunity to make a return with very low risk as a result. And so I think some of that piping of, especially where crypto meets institutional mainstream finance, is still being built out, and there's a lot of opportunity there. And then the other thing I'd say is, I think people just think crypto professionals it's the Wild West. And, I have team members from Goldman Sachs and JP Morgan. I used to work at Merrill Lynch. And so I think if you look at the quality of people entering this space and the way that things are going, it's becoming a very mature market. Even just in lending in 21, 22, we saw the whole lending market, everyone went bankrupt because the lending practices were so poor. And even in these drawdowns, we're not seeing that occur this time because the industry really is growing up.
Alex, thank you very much indeed.
Pleasure, Andy. Thanks.
Alex Bloom, founder and CEO of 2 Prime. After the break, we zeroed in on 3 plays in aerospace and defense. On Hot Picks, we looked at stocks in the aerospace and defense sector. We were joined by Evelyn Chow, portfolio manager at Neuberger Berman. We kicked things off with ITT. That's her top selection, and she thinks that it will gain from its forthcoming acquisition of an equipment maker called SPX Flow.
I think one area that really stands out to me as a global equity PM is, in fact, industrials, and specifically aerospace and defense. So you might be surprised to know over the last 12 months, industrials has actually outperformed the XLI by over 1,000 bips. And that's been due to a confluence of factors, including better than expected top line growth, a really, really capable navigation of the tariff environment, a broadening of the cyclical recovery trade, and last but not least, extremely tight supply and demand dynamics, especially within commercial aerospace.
Can I cut you off? Sorry, Evelyn, I wanted to cut you off there because I got confused by something you said. XLI is an ETF that tracks industrial stocks in the United States. That's what you mean? And
that's exactly right.
And sorry, what did you say about the performance of it?
It has outperformed the S&P by over 1,000 bips in the last 12 months.
Thank you. Sorry to cut you off there, Evelyn. We're tight for time, and I'm cutting you off again. Could you tell us about ITT, please? What do they do? What attracts you to that stock?
Yeah, ITT is not a household name, but it is a core portfolio holding. This is a mid-cap compounder, dominant in industrial pumps, aerospace connectors, and defense electronics. I see a mid-teens earnings algorithm over the next few years, both on the back of their organic upside surprise, but also, as you noted, Andrew, due to their impending acquisition of SPX Flow, which will make them a dominant player in the flow control and process markets.
And tell us about, how much of their business would be defense then? Is it fair to call it a defense stock?
I would say aerospace and defense probably makes up somewhere around 10 to 15% of current revenue base, but accelerating at a very high level. They're levered to the wide-body OE recovery as well as defense spending accelerating, not just in the U.S., but all around the world.
A better name in defense, Boeing, of course, a huge civil business, but tell us about their defense franchise and what attracts you to the name, or is it just the broad aerospace component here?
Yeah, I really think it's both, Andrew. So, you correctly noted Boeing has a great defense business. Boeing Defense has actually seen a great step down in the amount of charges it's taken over the last few years. That's a business that we expect to be well on the path to break even and eventually even better margins over time. I would say the call on Boeing really stems from the fact that post-COVID, we are still seeing that original equipment recovery. You know, a lot of planes are in backlog but still need to be delivered. I think Boeing is, finally reaching cruising altitude. A few key numbers to frame that. I think we should think about $13 billion of free cash flow within 3 years, $15 billion of free cash flow within 5 years. That's off of around low single-digit billion free cash flow today. And so I really see this great acceleration in the free cash flow ramp of this company, stemming not just from its position in defense, but also its position in commercial OE as well as services.
And then finally, a name that is huge in defense, Lockheed Martin. What would be your bull case on this stock?
Absolutely. I would say defense primes are ready for prime time. Defense spending accelerates not just because of geopolitical conflict. I think there's a recognition that we are entering really a new paradigm of deterrence. You see that reflected in the fact that we're talking about a $1.5 trillion budget in the U.S. Over in Japan, we just saw a landslide supermajority victory for the LDP, a party where the PM is very, very supportive of accelerating defense spend as well. And that doesn't even capture what's beginning to happen with NATO countries, especially Germany and Poland, that are really ramping their defense spending. I would say Lockheed represents a bellwether that had a few missteps over the course of 2025, but I really think this is the year where Lockheed is regaining its mojo. I see upside revision to numbers, backstopped by a very, very strong franchise in missile interceptor demand. You've seen a couple of framework agreements from the U.S. government to accelerate production capacity in that area, and I think Lockheed is poised to benefit in a really material way.
It's interesting. Yeah, just looking at their website, and they highlight the anti-missile missiles, but also unmanned or automatic autonomous maritime vehicles as well, ships that just sail under their own. Some of them have sails, it looks like.
It's a whole new world, Andrew, and I think, you see the primes really investing in a lot of innovation in this area, really as a reflection of the fact that defense tech is becoming much broader, much more sophisticated. These are much more elegant solutions to deterrence than we've ever seen before.
It's interesting, isn't it, finally, that just the Ukraine war, tragic as it is, we've seen the emergence of relatively cheap drones as an important weapon on the battlefield.
Absolutely. I think, unmanned and autonomous represents a really, really critical area of investment, not just for the U.S., but for the whole world. That will still be complemented by the fact that we will need very complex systems that are manned in order to mount a sufficient defense in all theaters of potential deterrence in wartime.
Evelyn Chow, Portfolio Manager at Neuberger Berman. Still ahead, we'll check out a few of today's trending trades. Let's have a look at some stocks of interest here. Bank stocks strong once again. There is a look at Bank of Nova Scotia trading in record territory. TD Bank, let's have a look there. It, according to my screen, hitting a new record high as well. Investors hoping it's put that money laundering scandal or regulatory action, I should say, in the United States behind it. Let's have a look at CIBC trading in record territory as well. Aecon hitting a multi-year high. That big light rail, the Eglinton Light Rail project in Toronto, finally opening this weekend. Aecon was one of the contractors on that. They're welcoming the open. I have yet to do my grace it with my presence. I'm looking forward to trying it. A tragic story here. Vizsla Silver stock down. Vizsla Silver saying some of the people taken from its operation in Sinaloa State in January have been found dead, according to their families. 10 people were taken. It's not clear how many have been found dead. Thank you very much indeed for watching Trading Day.